I too sick, man, I gonna need a medic. Obviously a fly, LV on my belly. Don't be the kind, that I'm my pocket heavy. Have money on my brain, keep talk what you're saying. Talk out with the code that I serve, not the lane. Ice on my neck that shine like a chain. Now that money, man, I know what you're saying. Bitcoin hot, I'm study stocks. I want all the hood, I'm a not that up. I'm flying like this, now I don't need a gas. I'm up on the line, anywhere up on the map.
What's up, guys? Welcome back. Malik here, and today we're going to be looking at my 3 trades on the NAS100 over Thursday and Friday. So on Thursday I made 1 trade, on Friday I made 2 trades. I tried to keep the risk relatively small because those are typically not the days where I have a high swing rate. Like, I don't usually get some good trades, and I noticed that from journaling my trades. So I decided that I'm not trying to engage a lot of risk, especially when it comes to trading on those particular days, because I know that it's moving kind of range bound, and I just can't really tell what's going on the market on those days. So on this one, the first trade I entered at 17,503.19. So that's this trade, and then I actually got stopped out at 17,519. So you can see where my stop loss was there. And then my, I guess, the take profit, look, since we're looking for a sell, say like 17,400 type shit, you know? And you can see I got stopped out within the same candle. So it didn't take me long to get stopped out. And that was 2 hours after market open. So that was like 7 o'clock Eastern time. And at that point, I was like, yeah, I'm not forcing this trade. You can see after the entire day, the market still came down, but it would have taken you until almost to close to get that sell off. You would have been in pain just trying to hold this position until you reach max pain. Then it starts to go there. Of course, you can try to get it here, but there's no certainty, you know. And I'm thinking 16 would be around 6:30 a.m. So this might be around 9. You could have sold it. It wouldn't be too bad. 9 or 10. Right. The next trade now, let's look on the January 26th candle. So I entered that one on the 1 hour candle. That's my usual. And I entered for a sell position. So we're looking at the January candle. So this point I was up. And then when I kind of saw it reversing, I was like, yeah, I would rather take something and I can risk that something on a different direction rather than it come and hit out my stop loss after me having such a nice gain, because I could really see it coming up. So this one, my profit level, since we're looking at a short, I'm looking for 1700, some arbitrary number, 17,300, right? My entry was 17,459.09, and then my stop loss is 17,470, and I actually got stopped out there. No, I actually manually closed it for a profit. So you can see my stop loss was about there. When the market started to kind of reverse, I closed it. Let's see when I close it on the 13 candle. 13. So at this point, I just decided to close it. You can see it started to take back a lot of the profits. From I saw this kind of structure change, I decided, yeah, let me just sell this, get out. So I sold it at 17,444.21 before it really reversed and cleaned out my stop loss before coming back down. So Friday was very range. So this is the Friday range: down, up, down, close to open. So those are the days I don't want to trade. And similar to Thursday, you have kind of range and then up, down, and what? We kind of close just a little bit lower than the range. So it's still a little bearish. And then on the final portion, I decided to enter a buy with my risk around the amount that I had profited. So at the very least, the day could have been about break even for me. So I wanted to keep it that way. Like, keep my profits. Like, I'm not trying to risk it just to prove a point, because the market can have very big moves and you never know what's going to happen. So I entered this one at 16,454.63. And then I got stopped out at, so I was aiming for 17.44, but I guess the broker stopped me out a little bit earlier because they could see where the trade was going against me. So I entered on this candle and I actually got stopped out on the same candle within a minute of price action. I got stopped out at 12.62. So you see the wick there. The next candle would have knocked me out. However, this would have been the candle I wanted to catch the upside. But after that, I just decided, yeah, it's not worth it. I'm not going to force it, right? So that's basically what happened Thursday and Friday. And if we were to look at this week, let's actually look at this week's trade, see how I actually did. So from there to there, perfect. So I had, this is Monday, so I had a 39 loss, $8 loss, 39 win, $8 loss. Tuesday, 18 loss. Wednesday, 58 profit. Thursday, 11 loss. Friday, 10 profit, minus 12 loss. So not great. I mean, I would say great in terms of consistency, but then in terms of size, I can definitely add more size. So it's just me kind of fleshing out the strategy, seeing that it works, and then I can engage the same strategy with more risks. So let's see how that goes. We're going to have a funny week next week. Hold on. So we have a big week next week. Next week we have earnings for SoFi, Philips, big companies, UPS, GM, Pfizer, Microsoft, AMD, Google, Starbucks, Skyworks, Electronic Arts, Boeing, MasterCard, Align, Qualcomm, Amazon, Apple, Facebook or Meta, Honeywell, ExxonMobil and Chevron, Abivai, Altria, Peloton, Royal Caribbean. So there's a lot of big companies having earnings next week. And then mix that along with we're having some like red folder events for the US economy, flash services, PMI, flash manufacturing. What else? Core PCE price index, which is what they claim the Fed uses for determining interest rates. You can see the actual is 0.2, the forecast is 0.2, the previous is 0.1. Interesting. We have unemployment claims, durable goods. So these are things that can affect the movement of the market. Mix that with also the earnings. So let's see how next week goes. I think I need to do a video about Tesla because like I don't think people really understand what Tesla is as a company. So while they're making the cars, they're doing the software that's like huge margin, and they're like the only ones doing it when it comes to autonomous driving. And autonomous driving is going to lead to a lot of travel services being offered, a lot of courier services being offered using these electric vehicles, a lot of Uber services being offered for the owners of these vehicles, and then every Tesla can become that with an additional fee, which it's Tesla's bottom line. So, and there's also the energy aspect to it, the energy storage. They're just reaping the energy from, they're harvesting the energy from the sun, turning that into, you can drive it. And then when you have a robot, I don't know if we're going to have this iRobot scenario, but when you have a robot and you can take the energy, turn that into labor, you can do a lot of things. Farming, housekeeping, building, cleaning, all types of things, helping you on anything. So Tesla is a really huge company. They have artificial intelligence, they have their semiconductors, they have the vehicles that are profitable. The best-selling vehicle in the world was Model Y, and artificial intelligence, robotics, energy storage. It's a lot. It's a lot. energy storage in terms of batteries, which is going to be big as we harvest more from the sun, try to move to more renewables. So see you in the next video, and bye bye.